Hi, this is Pete Birchler, stockmarketalchemy.com. It's after the close Tuesday, August 27th. Just a brief update today. This first chart we're looking at is the QQQ, the Nasdaq 100, which has been the leader of this bull market and of this rally here since June. And a couple significant points here. First off, yesterday it made a slight higher high by a penny compared to the August 13th high. And then we saw it reverse, close in the lower end of the range, saw a gap down today, and then it took out this swing low here from August 21st. So from a price logic standpoint, here we have an uptrend where we obviously have larger upward moves. We have more consolidation downwards moves, large fast upwards moves, more consolidation to the downward move. And now here, as we're reaching this high here, we see a couple points where we have a swing high and this gap down, another attempted breakout and a gap down. So we're starting to see the sharper, larger moves occur in the downward direction here off of this high, with roughly some support right near this level, kind of at the old highs from, let's say, May or just above that, and resistance at this level. So with today's gap down and close basically at the lower portion of that range, if we get some continuation and another close below today's low, that would give us some indication that we're probably shifting to a corrective mode here. Another thing to look at in terms of the logic of the price movement is the largest recent corrections here have only been about been relatively small here. If we just look at it on percentage terms, 75.16 up to 77, so $2, so roughly 2 to 3% or so on the corrections here. So if we start to see a correction get significantly larger than 3%, then we have some indication that this whole move up since June is being corrected. All right, now as far as some further indication on price logic and confirming price action here, let's look at this chart of the S&P 500. These vertical lines here, and I've showed this in recent updates, but this line here from the June 24th corrective low to this August 2nd rally high here, if we take the time of that and project that forward, that brings us to September 11th of this year. So just another, fast forward 2 weeks from today or tomorrow. And if we see price completely retrace, so move back below this June low here at 1560 on the S&P 500, if we see the market back below there by that time frame, then we're going to have in a predominant uptrend where we haven't seen corrections retrace any of the prior legs. If we see here a correction, a short leg up, and then we see a faster retracement of this last leg, then we're going to have some indication that the power of this market is shifting to the downside. Now, does that mean that's going to be a great time to short on a stop at that level? Possibly. We possibly could see kind of a market swoon if that support level is broken. My experience would suggest that if that happens, it will tend to be short-lived. So we may see a 2, 3, 4, 5 day, maybe even 1 to 2 week type of breakdown, and it may be large and it may be rapid, but we would see something to the effect of a break of support, the market kind of spike down, and then we would start to see some type of a correction. And that may coincide with a seasonal type of weakness and strength as well. Typically, stocks have their seasonal lows in the September-October time frame, and then are relatively strong from November in through December. So that's a general pattern we could look for here just seasonally, is to expect that if the market does continue to push down here, that we could see some type of a corrective low in place, whether that be a correction in a bull market or a first move down in a bear market, but maybe expect to see that here in the fall time frame. So just a quick heads up on that. As far as some other indicators, if we move to a weekly time frame, the weekly stochastics indicator is in a sell signal here, and it has roughly 3 more weeks before the stochastics could be in an oversold position on the weekly time frame. So while it doesn't have to get that low, typically on a well-developed correction, we're going to see at least the percent K line, this brown line, get to the oversold region or near it. So we're probably at least 2 weeks before it could even be close to being oversold, and probably a minimum of 3 weeks before the percent D line could possibly be oversold, maybe even 4 weeks. So this correction could still develop as well. The weekly stop and reverse level is just slightly lower. It's just about 1% lower in the market here. Well, oftentimes these can be fake out points where you see it triggered and then reverse. If it doesn't, then it can be a continuation point. So if we go back here and look at the initial breakdown, we saw some follow through once the SAR was triggered and then a rebound, but then as we got the next breakdown, it turned into a continuation point and a big swoon. So that's something we could look for here, is we could look and see, do we get some immediate dramatic type of follow through to the downside, or once we hit this stop level, are we going to see the selling kind of dry up and the market try and rebound from that point? But I don't know from this point, but I would say that it's possible that we do see the market actually continue to fall down rather aggressively from these levels. As far as the weekly MACD indicator, this is something I pointed out in recent videos as well. Given where the close is today, we're now seeing the MACD line on the S&P 500 below this recent trough here. And so that gives us a confirmation from the indicator of a lower high and a lower low on the indicator. Even though price made a higher high and is still at a higher low, the indicator is leading us and telling us that we have some confirmation of a sell signal here. So the way to use this would be to either short now with a stop above the recent highs if one is looking to short, or use it to exit longs, or we can actually look to wait till the close of the week prior to shorting, and that way we don't get caught in the middle of a week where the close ends up coming back higher and we see that indicator change. So those are just some thoughts on how to interpret this indicator for either entries or exits into the market. So that's all for this update. Have a great night and all the best to your trading.